Hey folks, welcome to Portfolio Update number 9 in my monthly series where I highlight all the other accounts in my portfolio. If you've been following me for a while, or even if you're new here, I started my investing journey in April of 2023 at the age of 50 when I realized that the stock market wasn't quite so scary. Now, what I started the channel, I started it so you could watch me build my TFSA from zero to maxing it out as I go along in my investing journey, but I realized I have all these other accounts, and so now I share them in a monthly series where I update all the other accounts. So in this video today, we're going to be going through each one of those accounts one by one to see what's been going on in them. Last month, we were sitting at $320,000. This month, we have grown to $336,000. That's a huge growth for me, and I'm super excited about it. So let's jump into each account and see what's going on. So today we're going to be using Passive. Passive is the tool that I use to track all the portfolio in one place, in one snapshot. It's a great tool, and of course, it does have a cost to it if you want to use the elite version. But if you don't want to pay that, it does actually have a free version. It's just some of the features are limited. Now, if you use my affiliate link down below, you'll be supporting the channel, and you'll also be getting some savings on the elite version, which is $99. On top of that, if you're a Questrade user, it's actually free, and some people don't actually know that. Now, if you want to learn more about Passive, I did do a video on it, so go check that out so you can learn a little bit more about it. So let's jump right into things, into each account and see what's going on. All right, so the account's sitting at $336,351, like I said, lots of growth. So you can see here on the main page of Passive, it actually shows you some of the overall picture. So we can see over the last 12 months, we've had $154,000 in net contributions. Now, don't get your minds all blown away by the fact you think I have a ton of money, because I don't. I just happen to move all the accounts over in one place into Wealthsimple, which is the main broker that I use. So I have Wealthsimple and Questrade. They're the two that I use, Wealthsimple being the main one. And I did do a video on that recently. So if you're new and you want to learn a little bit about Wealthsimple, check that video out. But of course, it tracks, you can see by the bar graph, when you're moving money in and out, and that includes the transfers in. So that $154,000 actually comes from some of the transfers. All right, we can see here that I've set a goal. Goals for me in my investing journey have been really important, and I would suggest that they probably are for you, because you want to set some reasonable goals. Now, because I started investing so late in life, I had to come up with a reasonable goal. Now, to be open and transparent, I have a pension, but my wife doesn't. So effectively, this money will be my wife's pension. And so I've set a goal. Now that goal is $500,000 by the time I retire. So I'm 52 today. I actually just had my birthday when we were away on our winter vacation. And so the targeted time is about 8 years from now. We're going to be retiring when I hit 60, and I'd like her portfolio, or the general portfolio, to have about $500,000 in it. So that's the goal. So you can see here, another feature is that Passive allows you to set that goal. So we're sitting at 67% of the way there, which is absolutely amazing. And of course, each month that continues to compound and grow over time as we continue to add money to the account, as well as have our growth in each of the securities within the portfolio. And of course, we also have the dividends that are being reinvested over time. All right, so let's jump over. We're going to go into each account and we'll see what's gone over the last month, check out the metrics and see what's happening. Okay, so we're going to start off with the last month within the portfolio and examine what's gone on, keeping in mind this is all of the accounts. So if you want to check out my TFSA and see how that's growing, you got to go check in my playlist and follow that side of things. And I don't actually do the updates for my TFSA or my RRSP in here. I cover off the other accounts. So the net contributions in the month of January were $4,405. We had a net change of $13,931 in the account, which is a rate of return of 2.97%. Investment growth was $9,525. And of course, Passive gives us this nice graph to show us what's going on. The green line represents the growth in the account. The blue line are the contributions into the account. In the month, for the entire portfolio, this is all of the accounts put together, the average monthly dividends on this account right now are $1,384. And you can see we didn't pay any fees or commissions in the month of January. Fees and commissions are so important. If you're a active trader where you're trading every day, you're going to be incurring costs depending on which broker you use. Now, I'm using Wealthsimple, and the reason that I do, as a beginner, for me, I found that it was a great platform to start with because it's the user interface is really simple, and they also don't charge any fees. So if you get into investing, you'll probably find that you'll buy some things and think, I don't know why I bought that and want to sell it off. But if you're using other brokers, they do charge fees every time you make a trade, and those fees will eat away at your profits over time, or the growth in your portfolio. So that's really important. And that's not to say that Wealthsimple is the best broker out there. I just found for me that it's the best for beginners to start with. Who knows, down the road I might change that. If you want to learn more about Wealthsimple, like I said, I did a video on it. I also have an affiliate link down below that you can use. You'll put a little bit of money in your account when you get started, and I get a little kickback as well to help support the channel. All right, so we can see here with the dividend graph that it breaks down how much dividends were earned in each of the securities. And so it's nice to see that. You can also see it in the activity tracker if you want to break it down a little bit more. And we're going to be looking at a little bit of those in a little bit here. All right, so we can see here in this graph where the dividends are coming from. XEI is producing our most, which is no surprise because it's a high yield dividend ETF that produces monthly income for you, and then it goes down from there. All right, so we had an estimated savings of $15. So that $15 savings comes from all the trades that I did. In this case, it would have been all the purchases because I didn't make any sales this month. So every time I buy, if I was using anything other than Wealthsimple, it would have cost me money, but in this case, we saved money. And of course, for the month, like I said, we had an annual, or the monthly dividend income was $1,384. All right, so taking an overall snapshot of the all-time returns on this account, which is what most people are interested in. We've had net contributions of $268,057. You can see that we've been contributing money every month, and I mentioned before that I had $154,000 in the last month in contributions, but you can see by these two big spikes here that that's where those transfers came into the account. Of course, all these smaller ones are my actual monthly contributions into the account as we move forward and try to make this grow. We can see here that the green line, like I said, represents the growth of the account, and the blue line is our contribution. So we have a nice steady increase in our contributions. And of course, with the green line, it fluctuates because from month to month or day to day, you're seeing ups and downs in the market. And of course, as your portfolio grows, a 1% change with a small amount doesn't show a lot of change, but as it gets bigger, you can see that it actually becomes quite a big change. Net change in the account, $333,000. Rate of return, $428. Pardon me. The rate of return on the account is 428%. That number, I haven't quite figured out why that's so high. I don't quite understand that metric, but it sounds outrageous to me. But the good news is the account's growing, and I think that's the main thing. The investment growth is $64,955. Now that's all-time returns. So that's a pretty significant amount of money for a guy who just started investing in April of 2023. Now imagine if you were really young. If you watch my channel and you're in your teens or your early 20s, this can grow. That's the main thing here. Start as early as you can. Start putting as little money as you possibly can. And we'll see as we go into one of my other accounts what I mean by that, so that you can see that it's easy to do and it's easy to start growing your account with little amounts of money and grow that over time. All right, so the dividend history, we just see a nice steady increase in all those dividends every month. And of course, here's the last month where we had $1,384. If you want to go back, you can check all of those over time. Now, the average monthly dividends that the entire portfolio returns is $730. Again, that's an average, because you can see that some months we have higher dividend returns and other months they're lower. The reason for that is, for instance, in last month, I have a few ETFs that only pay out every 6 months. Every 12 months. And so when those come around, then of course you're going to see a spike in those dividends as opposed to the ones that pay out on the month or the quarter or say every 6 months. All right, so the fees and commissions total from the time that I opened my account in April of 2023 were $400. So you can see that that number can add up quite quickly. So that's since April of 2023. If you were trading every single day using a broker that charged you for every trade, man, those fees are going to eat up your profits very quickly. So total dividends, this is from the very beginning of when I started investing, we're up to $16,461. Now, of course, if I was retired, those dividends averaging out to what we said was about $730. We would be using some of those dividends in retirement to start living off of. But for now, we're just reinvesting all of that money. So of course, we're seeing that number grow. And if you go back in my video series here where I do the monthly updates, you'll see that at one point there we were at $15,000. And of course, we've grown. That's turned out, grown up to $1,400 more. And we'll continue to grow as we make the portfolio grow from here. Okay, so the accounts all put together here, which is the nice thing about passive. I have several different accounts. So I have my spousal account with Questrade, my wife's RRSP. We have an account for the kids. I call it the kids TFSA, when in reality it's actually my wife. But I wanted to teach my kids who are now 10 and 11 about investing. I want them to get started earlier. I don't want them to do what I did and wait until you're in your 50s to do that, because their money can grow and compound for them, even if it's small amounts. And of course, we have my TFSA, which is the main star of the channel, why I started it. You can check out those videos, like I said, and my RRSP. And finally, I opened up recently a new spousal RRSP, where I'm doing a series on covered call ETFs. And so I have a separate series for that, so go check that out. All right, we're gonna go through the 3 different accounts, my spousal account with Questrade, my wife's RRSP, and the kids' TFSA, and we'll see how those are performing right now. Okay, so in my spousal RRSP, which is held with Questrade, and that's the reason that I get to use passive for free, I'm not making any contributions right now because I opened up that new spousal RRSP with Wealthsimple that we're doing this covered call series in. But I have made contributions over the last year, and so we're just going to go through, we'll look at the basic performance metrics, but that's why you're not going to see any money in here. So like I said, net contributions, there aren't any right now over the last month. And of course, we can see that because of that, we don't have any contribution streak right now, meaning we didn't put any money in. The net change in the account, $2,219. A nice steady growth rate at 2.64%. That's just in the month of January. Investment growth, $2,219, like I said. Average monthly dividends in this account right now are $349. And again, we can see the nice breakdown here of where those came from. We didn't pay any fees or commissions this month because I didn't do any trading in that account. Now, one thing to understand about Questrade is, depending on what you're trading in, is that's when you're going to get charged. So for ETFs, you don't get charged any commission fees, but when you sell ETFs, you do get charged a commission. And then if you're buying single stock positions, you're going to get charged to purchase that as well as to sell it. Now, one of the things that I love about Questrade is my portfolio is split. I have USD and Canadian funds, and that is also part of my diversification strategy, because right now we know that the United States, the market has been hit pretty hard with Trump coming in, and it's very unpredictable. But the good news is, because I have my money split, of course, when one is not doing as well, the other might be doing stronger. And right now we know the Canadian dollar is taking a big hit, but it also has increased the US side of my portfolio. So it keeps things growing steadily because I'm diversified with 2 different currencies. All right, so looking at the all-time returns in the spousal RRSP, we can see here by the graph that we did make contributions over time up until I opened that other spousal RRSP. Net contributions were $63,719. That's from the start when I started investing in April of 2023. We have a net change of $85,918. Again, you can see that nice growth in the green line there. And you can see we did make some contributions, and we will make some more contributions to this account. The rate of return on the account is 19%. And the investment growth is $22,199. That's from the start when I started investing. Average dividends on the account are $261 when you look at it in all-time returns. Fees and commissions paid, $400. And estimated savings, $805. That's because we were investing in ETFs in Questrade, where we make some savings. Dividend income in total, just for the spousal account, $5,705. Okay, so now we're in my kids' TFSA, which really in reality is my wife's. We are working on a strategy for the kids. I was looking at opening up a trust account for each of the kids. If you don't know what a trust account is, essentially it's in their name and we make the contributions to it now. And of course, then when they become the age of majority, they can actually use that money for whatever they like. But when I thought about it a little bit more, a friend made a suggestion that maybe the FHSA might be a good option because it will allow us to give them some money for their future, but use it for a very specific purpose, which is something that a lot of Canadians are struggling with, is housing. So that's something that I'm going to explore a little bit more over the next little while, and I know I'll be doing a video on it once I get my ducks in a row. So in this account, in the month, this is the month of January, we made $101 contributions. Now to you that won't seem like a lot, but what I want to do here is I want to demonstrate both to my kids the power of compounding and investing, but also if you're like I said, a viewer of the channel, whether you're new or you've been following me for a bit and you're really young, or even earlier, younger than I was when I started at the age of 50, that's why it's so important to get started early. So what we're doing in this account is when I originally opened it, I told the kids that we would make small contributions to it and then they would have to match that in some way with their allowance money. And so the way it works is when our kids earn money, whether it be through their allowance or earning money, for instance, my daughter actually made some jewelry and sold it at a school event. She also did it here in the driveway of the house and made some money on that as well. When those funds go into their bank accounts, which we have for them, so we have a checking account for them, a savings account for them, and then of course an investing account for them. And the money is split, which I've taught them it's 20, 30, and 50%. So 20% goes to investing, 30% goes to savings, and 50% they can use to buy whatever they want, or in many of our cases, that would be your general revenue, so paying your mortgage and your bills and things of that nature. So every time they put money in, we've been putting money in as well. And right now, the total amount put in every month, or pardon me, every week, because that's how much money we're putting in for them. Every week on Monday, $25 goes into that account, and that is complemented by the money that they earn. And then we invest that and we teach them what to do. So net contributions, like I said, were $101. The net change on the account was $186 with a rate of return of 3.89%. Now this account does have, like the other ones, an asset allocation where I have it broken down. Most of my accounts are very similar when it comes to the asset allocation. And I taught the kids, because this account is smaller, the smallest of the accounts that we have, I've diversified it out and I've shown them what we'd be investing in. And so then we use passive every Monday in order to help us decide what to buy. So what passive will do is look at the amount of money in the account, look at your asset allocation, and then it will decide based on the prices of the different securities which one to buy. Investment growth over the month of January was $85. The average return on dividends, it's really low, but keep in mind this account is small. So since the inception, of course, we've slowly been adding money as on our side of things, and the kids' amount is growing. That's the power of compounding. It doesn't have to be a lot. This account was started at $0 and it's now well over $2,000 and growing. No fees or commissions paid because this account is held with Wealthsimple. Like I said, there's an affiliate link down below if you're interested in using that. So the total dividends in the month of January, as we know, are $13. Flip over and we'll look at the all-time returns on this account. So on the kids account, you can see there's just been a steady increase. That's why the bar graph, a very visual person, looks pretty neat to me. So the net contributions were $2,387 from its inception. We've been putting money in every month. Net change, $2,336 with a rate of return of 13.15%. Now you can see here that the contributions on the blue line have outpaced the actual growth of the account until just the beginning of, it looks like, yeah, basically in this month of January. That green line has now caught up to the contributions. So the growth in the account is going to surpass the contributions of this account as we see it growing. We have an average of $3 of dividends in the account. Of course, the bar graph makes it look like a great deal more, but that doesn't represent the amount of money. So we're averaging about $3 a month right now on a $2,000 or $2,200 account. No fees or commissions, like I said. And total dividends on the account all time are $75 to date. All right, so now we're in my wife's RRSP. This is definitely the largest account that we have because she had previously established it a long time ago. And then I took this over, unfortunately, when her father passed away. He used to manage it, and that's what actually generated me to start this channel in April of 2023 when I realized that there were so many things that I didn't know about investing and how to manage your money. And one thing that I'd like to impress upon a lot of you, and I mentioned it earlier in this video, but the importance of financial planning doesn't involve just investing. A lot of people can focus on, where you put your money into what ETFs or whatever stocks, but the reality is that financial planning is more than that. I'm using sort of the more passive approach when it comes to ETFs. I do have single stock positions, and if you watched my year-end video, you'll see that I mentioned that in this year I'd like to learn a lot more about evaluating single stock positions to see if there's some value out there in investing in some of those. But for the most part, we're investing in ETFs because it's very easy. You're diversifying yourself. You don't have to, read financial reports and decide that tomorrow a stock's going to take a dumper and you might need to sell it. So this account, like I said, is the biggest and it's grown the most. So in the month of January, we made a net contribution of $625. I've been putting some money into it because we're at the end of the tax year. It's coming up for tax time. And I always like to do that at the end of the year just to make sure that, there aren't going to be any unexpected taxes as far as my wife's income go. So we offset a little bit of that at the end of the year by throwing some money in here. Net change in the account in the month of January, $5,141 with a rate of return of 2.75%. The investment growth, $4,516. The average dividends in this account for the month of January was $636. No fees or commissions because this account is held with Wealthsimple, and it is also diversified into USD and Canadian funds. And of course, like I said, here's a nice graph of where the dividends are coming from. So we'll jump over and look at the all-time returns on this account. The net contributions on my wife's RRSP, $134,918. We have put some money in it throughout the year. One of the big spikes we put money in February was, or I guess it would have been a little bit after February, but it was a tax return that she got. That money was plopped into here, and we're going to do that every year. It's tax time right now. I'm doing our taxes, which by the way is also a nice thing about Wealthsimple is you can actually do your taxes, and depending on which tier you're in with Wealthsimple, you can actually save some money and it might not cost you anything at all. So net change on the account, $170,000 with a rate of return of 10.85%. Investment growth, $35,160. You can see by the blue line that obviously we're not making a great deal of contributions, but we are seeing a steady increase in the account. The average dividends in the account are $312, but if you look here, you can see when we look at the all-time returns that in the beginning we didn't have a lot of money in the account because I ended up transferring one of our other accounts in, and so that average is not as high as it actually should be. No fees and commissions paid because we're using Wealthsimple. The total dividend on the income on the account is to date $6,976, and of course that's growing as we then reinvest money through those dividends back into each account. So I've mentioned several times in this video that I opened up this brand new Spousal RRSP with Wealthsimple because I started doing a case study on covered calls. So if you want to learn all about covered call ETFs, you should watch this video right here.